Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. In support of that mission, we've been doing these free mentoring roundtables for years and years and years. We started way back in 2008 with an experiment, and then that blossomed into the full-fledged 1M program in 2010. We've done 576 of these sessions, the free mentoring roundtables, and we use the same format in our private roundtables for our premium members as well. So we do a lot of roundtable mentoring with entrepreneurs all around the world. This event is being recorded, and every single roundtable recording, the free ones, are available on our YouTube channel. The premium ones are available in the premium lounge. On Twitter, we're at 1M1M and at Romana. Today's hashtag is 1M1M. It is a roundtable, not a broadcast, so we very much invite you to join. We have a lot of scheduled programming first today, but I will open the line up for open Q&A, and you're very welcome to participate. Today, we're going to start the conversation with Chandrashekar Kupperi, founder of Anova Corporate Services and a general partner at Peaceful Progress Fund, an angel fund, which is the topic of our discussion today. Chandrashekar, welcome. Do you like to go by Chandra or Chandrashekar?
Just call me Shekhar. Thank you for having me here, first of all, Shramanna. It's absolute privilege, happiness, being here.
My pleasure to have you. So it's an opportunity for us to get to know each other as well as our audience to know you. So let's start there, actually. Tell us a bit about your background as well as about what you're doing with Peaceful Progress Fund.
So I'm an old guy. My professional journey began as early as 1997. So I'm sure some of the entrepreneurs out here would be much, much younger to me. So I have almost 2.5 decades of experience. My basic qualification is in finance and accounting. I'm a chartered accountant from India with multiple other professional qualifications, both in finance and management areas. I started my career with ExxonMobil, and then I moved to KPMG. And my last stint as an employee was with a UK-based multinational. And this company, had consumer brands. They were mainly in the skincare and hair care. And it operated more like a private equity. We used to buy brands from Unilever, Procter & Gamble. That's what we did. And Shramanna, this is what happened to me. I had a phenomenal experience and journey with them because I was able to meet some amazing iBankers, private equity funds, venture capitalists, hedge funds. But I think more importantly, even law firms, because that's where I truly understood how do you structure a transaction. But if I have to say, very boldly, also to say how to say no to a transaction. So I think that was a phenomenal journey for me. Did 11 acquisitions and 4 divestments, and we sold the business to another multinational. And then as I was doing that, somewhere this entrepreneurial bug bit me, and that's how Anova was born. So Anova effectively started in June 2013. Anova is basically an advisory firm. Our focus is in 2 verticals. One is M&A, and the other is fundraise. We work actively with the MSMEs in India, as well as the startup ecosystem. We help mainly on the equity side and on a need base. Whenever we think hybrid is required, we work even on the debt. Anova is sector agnostic, but my sector focus is generally consumer, manufacturing, and you can't leave technology. So technology is the other area where I work. And quickly on Peaceful Progress Fund, that's a fund which we got the SEBI approval in February this year. It's an angel fund, a 50 crore size, and it can go up to 70 crore, that is circa $10 million fund, focusing on technology, consumer, and electric vehicles.
All right, so let's double click down on Peaceful Progress Fund and tell us a bit more about what pertains to our audience, which is tech-related stuff. So technology-enabled services, e-commerce. There's a lot of consumer brand building going on right now in an internet-first mode. I presume that if you're doing consumer, that's part of your purview.
Exactly.
So tell us more about what your investment thesis is relative to where we play.
Sure. So first of all, when we say technology, Shramanna, we are keeping it simple. We are keeping it to plain vanilla that we understand. So it is the world of fintech, health tech, ed tech, food tech, consumer tech, retail tech, manufacturing tech. And of course, you spoke about the consumer, so therefore also D2C, direct to consumer, and definitely, e-commerce, marketplace, sort of models. So the idea of investing in technology is to ensure that the technology is an enabler rather than a pure play. So it could be the likes of AI, ML, deep learning, or even sometimes augmented reality, virtual reality, which actually enables the business to perform better. That's where our focus is. And the fund does co-investment. So, we don't want to take the credit saying that we are the first institutional investors. We want to ensure that we co-invest with either other angel platforms or venture capital firms. So to the entrepreneurs out here, if you have already raised money from an angel platform, I mean, feel free to approach us because we will definitely want to review your business and ensure that we are also able to give you a quality feedback given the experience, that some of the sponsors, and LPs, carry out there.
What size checks do you write?
So typically it is between $150,000 to $400,000, but can be slightly higher too. So it depends on the startup and the requirement, but that's a sweet spot.
So let's do a few examples of companies that you've invested in within the tech-enabled sphere.
Sure. So let me begin with the first one. It's an edtech company, but nothing to do with academics. So this is a startup which basically ensures that they're able to help students or professionals connect with the right mentors. And all happens via an artificial intelligence and bot. And what this business does is it ensures, that not just the connection happens, but also any follow-on support is also given by the startup, even in terms of a placement or even some sort of a support to even understand the segment better. I'll give you an example. Let's say somebody want to get into deep learning, and they want to understand what is NLP. The mentor would not only guide them in terms of getting the basic understanding, but also ensure that if they want to get and be part of a startup or a business, they will connect, the student or the professional. And this business has been doing quite well. They've got almost 7,500 mentors onboarded. The sort of, user base is more than 300,000, and they're doing extremely well. The second
and what is the business model?
The business model is basically B2C and B2B2C. So they connect with the customers directly and then monetize, but also they have tie-up, with other businesses from where they're able to get the consumers. So it's a SaaS-based model.
SaaS-based model.
Yes.
I see. And okay, do you have one in fintech, an example in fintech?
We have just invested in a fintech business, but this is very, very interesting, Shramanna. They started as a HR tech payroll business because they onboarded almost 10,000 corporates, and therefore they have 400,000 employees or staff, as part of their system. And what they've just pivoted now is they have bought a neobank, and because they bought the neobank, they are doing two things. One is they are able to give the earned wage access, which is a salary credit which happens in between the month. And slowly they're going to also ensure that they're able to lend, based on the credentials of the employee. And the reason why they want to do that is because they have the database within the system. So it becomes so easy for them, to do the underwriting and then offer the support. So
there are a couple of companies that are doing quite well in that sphere, Earnin and PayActive in the US.
Absolutely well said, Shraman. Absolutely well said. In fact, the earned wage access is something which we initially thought, would be difficult, to monetize. But trust me, the sort of traction that we are seeing is unbelievable. And it's not also too pricey on the employee. So it becomes, even more handy.
Yeah. Okay. And now in these two examples that you gave us, how did you meet these entrepreneurs? Did another investor who was leading the round bring you into the deal?
So because we are a co-investment fund, obviously, the deal would come from the platform or, the fund. But then, that doesn't, mean that we will invest because they're introducing. So obviously, we have conversations with the founders. And when I say conversation, what essentially we do is either a couple of the sponsors and the members of IC. We typically have a conversation. It's a very general chat to understand what is the sort of motivation for the founder to get on with that business. What is the motivation in terms of ensuring that the founder can build the team, the scalability. But I think what importantly we are trying to understand is, do they also map the competition? Because one of the aspects that we are very clued on is, if the startup entrepreneurs, they respect the competition, that gives us much more confidence, because that means that they're going to come up with some economic moat, against the competition, or they're going to come up with some differentiation that is going to help them have a little bit of an unfair advantage. So we always ensure that we speak to the founders, try to understand what is their ability to scale up, but more importantly, do they really understand the problem and the solution that they have come up with, how well they can execute. Because in many cases we have seen that every idea is great, every problem that they come up with is outstanding, probably the solution is also very interesting to hear, but then where we see the difficulty is the execution, and therefore the traction is very important for us. And sometimes you can't explain the traction always in a quantitative manner, and therefore sometimes the qualitative aspect of how they're sort of even gelling with the customers or the suppliers or the ecosystem is very important.
Shekhar, what is your strategy vis-a-vis some of the dynamics of the Indian ecosystem right now? There are larger funds like Tiger and SoftBank who've been flushing startups with capital and creating lots of barrier, competitive advantage with capital. Are you going to act as a feeder into these kinds of situations? Do you have a different philosophy? How do you parse this particular dynamic?
Very interesting question, Shramanna. The fund's thesis is very simple. We invest in seed to pre-series A. And if you see the likes of Tiger Global or Sequoia or SoftBank, they obviously are at a much higher rounds, typically Series B, Series C onwards. And therefore, what happens is we are able to attract a lot of startups at an early stage. And we are also able to sometimes offer the support from the LPs to mentor them, or even guide them, or even connect, given the network effect that we carry. But I think more importantly, because we are a fund which is co-investing, we also have the ability to do a follow-on round, which may help the entrepreneurs, to ensure that the traction is better, so that they can go for a much bigger
That's not
funding.
my question. You didn't understand my question. My
Sorry.
question is, do you want to act as feeders into these humongous rounds? Because small funds like yours get diluted heavily, as the game that the Tigers and the SoftBanks are playing is they're putting in huge amounts of money in the later rounds, and some of the smaller funds that we have brought in here have said that it's not so easy for them to play that game, right? You can't really do pro rata at those levels. So some of them are seeking exit when let's say a very large Series B or Series C comes in, the small funds are taking an exit. So that's my question is, how are you processing this dynamic of very large funding rounds downstream?
The answer is very simple, Shramana. We'll look for an exit, because obviously the larger funds would not want smaller funds to be there, because of the rights and everything. So our idea is to seek an exit at that time. So that's the philosophy that we carry. That's the idea of being at an early stage also, because clearly it would be very difficult to still continue as a fund and not have certain rights, because you will lose out on the liquidation preference too at that point.
Exactly. You lose on all the liquidation preferences. That's exactly my question.
The answer is very simple. The answer is very simple. We would want to seek an exit, and that's what we would want to do. And that's what typically happens. I'll give you an example.
Is that what's happening across the board in the Indian small funds?
Absolutely right. Absolutely right. And that is the reason why, a lot of early stage funds, they're rising. You'll be surprised, India has got 900 funds, and the early stage funds, are also increasing, because they feel that, they will be able to get an exit at either a Series B or a Series C sort of rounds. Sometimes happens even in a Series A.
Yeah. And then it makes sense. It's kind of, you split business building into two phases. You
Very well
take
said.
the early stage with the
Exactly.
smaller funds, and then everybody exits into as the company gains traction, and this game of very large funding rounds starts to kick in gear. Because there are there are challenges to that very large funding round game, right? That doesn't
Exactly.
always work.
Exactly. So you interrupted me, but let me finish that because it's very relevant for the entrepreneurs out there. What happens in an early stage phenomena is that, as you're investing and you have other co-investors too, you have an ability also to put a follow-on round, which is much more easier for the entrepreneurs because they have already had a, sort of interaction with, or rather, some sort of a network has already happened with the existing investors. And that helps them even to improve the traction before they approach the larger funds. Because when they have to go for the larger fund, obviously the thinking is they have to raise a bigger amount. They can't raise a smaller amount because the
Yeah, and
ticket
you
size
need
itself will be
traction to justify that. Yeah.
exactly. So that's
Yeah,
what
but
that's
still,
the game that we play.
there's only so much you can do with a $10 million funds. That's there's limitations to how many deals you
I
can
said we are
do and how much
co-investment.
follow-on you can do.
I said we are co-investment.
Yeah. Okay. Cool. What other trends are you seeing in the Indian startup ecosystem right now that are worth discussing?
So I'll focus on consumer because that is the other
Yeah.
focus area of this fund. And we are seeing that there's a lot of product personalization startups that are coming. So there are startups, which ensure that, there are DNA testing kits, which help, to sort of find out what is the requirement of the consumers. And that personalization is becoming quite big. The second that we are looking at is sustainability, because there are a lot of startups, which are getting into the sustainable sort of businesses. What I mean by that is sometimes, it is also to do with natural, organic, things,
Yeah.
which are plant-based, and all that, is becoming recycled, sort of products. All that is becoming quite an interesting business. The other, startups that we're looking at in the consumer space is to do with supplements, which are, helping in terms of even augmenting some of the requirements, of consumers on the skin care or hair care. So
Mm-hmm.
this is an interesting area, that is happening even from the consumer world. And finally, we're also trying to look at certain startups which are helping with the virtual try-on technologies. So this is like the world of the businesses which can help you to have an e-commerce platform, but also give you a feel that can you do a virtual try of the
Yeah.
product so that gives them the feel of whether it fits properly or whether that's a product that they should choose.
And in the B2C world, of course, the first wave of e-commerce startups we saw were targeting the affluent population, and then after Reliance Jio came into being, we started seeing the lower end of the Indian consumer becoming more accessible because they had a device, they were, you could advertise to them, et cetera, et cetera. Where does that stand from where you sit? How do you analyze that whole dynamic?
It's a very important question, Shramana, because I think many, because I come from a consumer background, I work with a lot of consumer, businesses. I can tell you there's something called the bottom of the pyramid, which is where you
Yes.
actually see there is significant potential. And thanks to what Jio is doing, because the accessibility, for, people to have a smartphone and therefore the ability, to sort of look at, various products and at the prices, that they find, affordable to them is definitely happening. So I think what has led to growth in terms of startups is they're looking for space in the tier 3, tier 4 sort of cities. Earlier the focus was on
Mm-hmm.
tier 1, tier 2. So there are startups which focus on tier 3, tier 4 where they see that the consumer traction is even more significant. Sometimes even the loyalty, even that they see there. So the trends that we see is one is the stickiness. Second, is in terms of the ability to ensure that they are able to use a smartphone and buy the product. But I think more importantly, because it's like a little more close community, they are able to refer the products much more easily to others, and that increases the buying propensity.
What are you seeing? What are some examples of really good companies that are focused on that segment?
So there is a company which is into Ayurvedic chocolates. So this is an interesting, and they chose to sort of launch in tier 3, tier 4 rather than a tier 1, tier 2 because you have the competition from the biggies. And what has happened is that because it's Ayurvedic, number one, the health benefit is easy to convey, but more importantly, even the way it is done in a format that is easy for the tier 3, tier 4 customers to resonate with. What this has done is, one is it has led to the increase in the wallet size, the ability to offer some of the products that the consumer are looking for, and therefore that research, that insight happens much more easily. But the third thing which has happened is we have realized that there are certain pockets where people are having the ability to spend, because typically we think that the spending potential is not significant in some of this tier 3, tier 4, but it's actually quite the opposite. And therefore sometimes you can even have product ranges where certain premium sort of launches could also happen there to ensure that you're able to meet the customer taste, the customer preference.
So, and what category though? I mean, in a wallet that is tighter, you have to hit the priority segments, right? So I imagine in India being India, EdTech must be on top of that list, yeah?
Yeah, because it's the pressure from the parents too. India is India. So as you know, so there's a lot of focus that is given on EdTech because, the actual, consumer, okay, and the actual customer, they are different people. For example, the customer is a parent, the consumer is the child. So what happens is
Right.
the customer has the willingness to pay, and therefore, if the EdTech, the startup is able to entice the consumer, the student, then it becomes a big game. So I think we should never get carried away by the fact that EdTech is doing so well. I can tell you there are almost 4,000 EdTech startups. 1,500 have already shut the shop. Okay, the others are literally struggling to sort of make their ends meet. Of course, they're active. So it's only the unicorns that we get to hear, and then we get carried away. The likes of Byju's and Vedantu, Upgrad. This is what happens. There are some cute edtech startups which do not touch the academics. That's why I gave the example of this particular startup where we have invested. They're trying to do things other than the academics, the K-12 as we typically say. So you're right to say that edtech has got significant sort of eyeballs, but it depends in terms of what sort of segments that they're playing into, as well as the customer base, because the academics is something which has got extremely crowded. And if it is a Me Too, they can't survive there.
Is there any edtech company that is doing well in the tier 3, tier 4?
There are, at least, couple of them, which I can think of. And when I say they're doing well, there are two things that we need to understand. One is their ability to increase their user base. And the second is, are they also able to ensure that the customer, life cycle is increased? Because what happens is sometimes, you offer a course, and with that, your consumer, stops sort of, attending, to that particular, whatever is that package. But then if you're able to give an add-on package, that's where, this becomes even more interesting.
Yeah. Well, I think the question really is monetization, right?
Exactly.
Getting a whole lot of free users is not a business. You don't build a business by giving a lot of stuff for free.
Exactly. So I think what is important is lowering your CAC, but also ensuring that you have a customer lifetime value which is which is at least 3-4 times of the CAC, so that you believe that there is going to be a profitability at some point of time. Most of them, they bleed, they don't make money in the early sort of years, but definitely because the user base is increasing. If somebody can track how well the user base is increasing, how active they are, what is the churn, but more importantly also ensure that the average revenue per user can go up, then I think this becomes significantly a big play.
Yeah.
Byju's, which
It'll
is
be
considered one
interesting.
of the top notch.
There will be some companies that will come out of that, bottom of the pyramid in India, by catering to that bottom of the pyramid wallet in India. I don't think we know yet which ones are going to emerge as the big successes for that segment, but I think that's a very important segment, which, in the beginning, when the India story started to get traction, everybody was talking about billion consumers, billion three consumers. No, the whole story was focused on the tip of the pyramid. It's like skimming from the top, basically. Only after Geo that secondary market has opened up, but I don't know that we have quite cracked that yet.
You're absolutely right. We have not yet cracked, and probably there are two reasons for that. One is, the ability of the startup also to survive and get the right level of funding. Because I think the world of venture capital, the world of, funding, has still not evolved to support, startups, which are saying that they can make a difference, in the tier 3, tier 4, because some, the confidence level is still not significant. Of course, it's happening, but not to the level that we want. There are funds
Well,
that
that's
say,
because the trajectory, the pace of growth generally is not there, right? The
exactly,
VCs are trying to go from 0 to 100 million in 5 to 7 years. The tier 3, tier 4 markets are not offering that kind of trajectory yet.
exactly. So it takes time, and it takes time because of two reasons. One is again to ensure that the penetration is done in a way that there is a connect. You just can't do a digital marketing, some sort of a gimmick, to say that no, you can onboard customers. And the second is you also need that level of people, who can ensure that no, it is the message is passed on, correctly, and probably you also need the vernacular sort of languaging that gives them the confidence that the startup can
That's
support.
also true. Yeah, it's the vernacular internet, not the English internet. That is correct.
Exactly,
Yeah.
exactly.
Well, Shekhar, very interesting conversation. I'm sure we could go on and on, but let's listen to some of the entrepreneur pitches. Are you staying?
Absolutely, yes. I'm staying. I'm going to put myself on mute and off my video, but I would love to hear the entrepreneurs.
Okay, terrific.
Thank you for having me, Shramana. Thank you so much.
Pleasure, pleasure. So, folks, we are switching to the entrepreneur pitch section of the program today. I believe we have 3 entrepreneur pitches. Just to set expectations for the 3 of you who are pitching today, as well as those who will be pitching in upcoming sessions, we are on your side. This is not Shark Tank. We're not trying to entertain people. This is a serious working session where we will listen to you and give you feedback on what we think may help you. If you disagree, that's fine. It's your venture, so you absolutely have the prerogative to disagree. But it's, probably a good idea to listen and decide what you want to do with the feedback you're getting. So Karthikeyan, you are first. Please unmute your line and tell us what you're working on.
Hi, Smrana. Good morning.
Good
Yeah, I'm
morning.
Karthik. I
It's
was
very
born, brought up.
late for you, isn't it?
Yeah, yeah,
Thank you for staying up.
yeah. So it's my pleasure here. So like I have been watching your series like almost like 3, 4 years. I have been following you on LinkedIn everywhere. So I thought like let's put this startup to you first and get your feedback how to go forward. So I'm currently
Great.
like I'm in Singapore. So I'm working on this startup called like T-Ora, which is a truth oracle, which is basically on based on the blockchain. So before I going into T-Ora, like I will let you clarify like this is fighting against the fake news. So we all know like the fake news is going to be the biggest threat or is the biggest threat to the democracies. They have
Yes.
been like we all know like how they have caused the polarization, increased the hate crimes, everything else. But like there's also another aspect of the fake news is like currently they are like generated in an industrial scale and they are spread virally and like it is so difficult for any common person to identify whether it's a fake news or not. So this is the
Yeah.
main problem. So next slide, please. Like so, the people who are fighting against the fake news, like, are like let's say like the fact checkers, who are like basically the professional ones, but they are not up to the speed at which the fake news are created.
Yeah,
Let's say
it's
like if you,
impossible. It's just
yeah,
not possible to do it at this scale, right? Yeah.
yeah. So that's what like so these are the things they are lacking behind. So if you see like
Oh my
this
goodness.
one thing like.
Wow.
For 17
That's
million Facebook users, there are only like 7 fact checkers. So that is the level of ratio we have. So this is what like Tora is trying to, what do you say, like do. So it's a decentralized fact checking app. So it's a decentralized application and it like works on the principles of like wisdom of crowd. And it has a carrot and stick policy kind of uh, operation. So since it's on blockchain, it is completely scalable and it has a token to play with the rewards. Also like to give some privacy to the fact checkers. Because what we recently understood in the real life is like whenever the fact checker provides something as a fake or thing, the people start attacking the fact checker based on his background, like whether what religion he is or which political side he is. So
Political. Yeah.
those kind, yeah, so those things. So we just want to give that kind of thing. So that is a crypto token will be used for the payments and everything else, and it's a completely Sybil resistant one, and it's like backed by research. Okay, next slide. So what is the research is like MIT has done a research on how to scale up this fact checking as a process itself. So
Mm-hmm.
what they found out at the end is like even like if we have a crowd of 26 layperson who are not professional fact checkers, if we take their aggregate decision,
Mm-hmm.
we can see like it is going to be equal to the accuracy of a professional fact checker. So
Mm-hmm.
like instead of waiting for a professional fact checker to deal with the facts and bring out the thing, if you just ask a 26 a normal or lay person of what they think about that particular news or especially the tweets or the headlines, if you are able to aggregate those decisions, then it will be as good as the professional fact checkers. So I believe like this is where like we are like the entire industry is waiting for the professional fact checker to do his process one by one and
Mm-hmm.
complete his thing, then only to give it, because like sometimes it takes a week for the professional fact checker to determine whether the news is a fact or a fake news. So this is how we are planning to do that thing. How it works is like it's just like we use the existing APIs with all the Twitters, Facebook,
Mm-hmm.
and like sometimes like YouTube are not there. So Facebook and Twitter we are trying to do. So anyone can request, or like even like we are planning to partnership with the Facebook and for in their fact checking thing as a third party fact checkers. So what we
Mm-hmm.
do is like our script pulls into our platform, and the platform we provide to our own like 26% or like more the people. We will ask them to vote on whether this is a fact or a fake news or based on this thing. Okay, so the people based on their vote, and we take like 80 percentage as the anything to get like to determine the decision. Any option which gets more than 80 percentage is considered as like the decision of the thing. So like if it's a fact, 80 percentage people believe that it's a fact, then it is considered as a fact. Else it's considered as a fake news. So that's how we are doing it. And there is a like people have to, since it's on a blockchain, like people have to place a stake of tokens before they do the fact checking, and if they win, like they get a smaller prices, else they lose a part of stake. So this makes sure like they do their work sincerely, not in an unbiased manner. So this is a high level work it is going to do. Next slide, please. So like what I believe, like so the total addressable market for the TAM, like the for the fact checking, like which is including social media, publications, and broadcast media is somewhere around like 150 million. This thing, but it's like slightly on higher side. But I have to like kind of extrapolate, so that's where that market is there. But
This
what
is market size for what? How are you calculating market size? Is that the people who are going to do fact checking for you?
Yes, that how do I do is like how much money is spent by the fact checkers across the world. It's not like particular geography, but across the world.
Because
So
you've made one major error, 150 million, 8 million, and then you put dollar 1 million. I don't think that's what you intended. Intended to put 1 million people.
uh, yes, Althea, 1 million in the sense is like what I did was like how much money is spent on this fact checkers in the whole across the world. So that's what the TAM was like 1 million, 150 million is what being spent on that market. So
$150 million is being spent on the market. That's all.
yeah, Samran. Sorry, that I missed that. Like it's like around like $150 million is spent for the fact checking. In the sense like both revenue wise as well as the way the fact checking take the money as donations or grants, all those things
This
included. Like
requires work. See, TAM cannot come before business model.
yeah,
You have to
that's what I
bottom up
missed like
TAM.
yeah, like so like okay, so my business model is like we are planning to act as a third party fact checkers for the major like social media companies. So that's what our primary thing is going to be. we are trying to help them as well to do the fact checking, and also like they're also in need of a lot of fact checkers to justify like themselves in operating or like trying to fight the fake news as well. And the next is like a smaller, yeah.
Have you talked to any of these social media companies?
Not exactly the social media companies, but with the fact checkers who are working for those one of the assignments, like those things. So based on his inputs, like, yeah, like we have been like kind of like a subject matter expert, we have consulted him.
I would say
He's
that
fact
is one of the top validations that you need to do, is whether the model you're proposing is something that the social media companies would accept or embrace, and that validation is vital to what you're
Yes.
trying to do.
So
Because
while we
ultimately, you need a customer. People are not going to do just see the closest example to what you're talking about is Wikipedia, which is a crowdsourced kind of
yes,
single source of truth, right? And it's very tightly moderated by the Wikimedia Foundation and all that, but it's a nonprofit. That is not
yes,
something that has any financial model. It's not a business venture, etc. So now, if you want to do this as a business venture, you have to have people who are willing to pay for it. And I think the people for whom this is a massive pain point are the social media companies. So
yes,
my number one feedback to you is go run by your assumptions with the social media companies and see how they want to work with you. What kind of, do they buy into this proposition? How can you work with them? And it's a very simple, because for these people, the pain point is so acute. It's a very simple test. If they say, yes, we like this, we're going to do this, you should be able to get this going very quickly. If
okay,
they say, no, we don't buy into this, then you have to take the
stop
feedback and
again.
understand why they don't buy into it.
Okay,
And that is the litmus test that needs to happen ASAP.
okay,
That's the
okay.
next step.
And I'm
Okay?
just trying to like build the like product to show them like this is how we are planning to do. So then we thought like we move to approach those things, because like we had a subject matter expert who said like, yeah, they are definitely looking for various ways of fact checking. So we'll start build the product, then we will be.
Now, don't talk to them. I think you need to
Okay,
get direct input from these people. Explain to them what you're trying to do, how you're going to do what you're going to do, and see what they have to say. I would like you to go talk to a number of social media companies in general that are dealing with, fact-checking issues, and see what you get.
okay, okay.
All right.
Thank
Good
you.
luck.
Yeah, thank you.
We have Nik Balachandran next from Walnut Creek, California. Zabble. Nikhil Balachandran.
Hi, can you hear me?
Yes, we can hear you. Go ahead.
All right, thank you so much for having me here. I was supposed to join a couple years ago, and I didn't, and I'm unfortunately I missed that, but I'm glad to be here.
Okay. Is it the same company that you were doing a couple of years ago, or is it a
Yeah,
different company?
same company, just made a little
Same
more
company.
progress. Yeah.
Okay. Tell us what you're working on.
Sure. So hi everyone. I'm Nik Balachandran, founder and CEO of Zabble. Zabble's mission is to help organizations achieve zero waste by delivering real-time actionable insights using AI. Next slide, please. So we have been featured for our work in prominent waste industry magazines and for our work with University of California, San Francisco. And last year, we were recognized as one of the top 5 AI startups advancing the circular economy. And end of last year, we were also funded by the EPA in one of its first funds to advance the recycling infrastructure in the US. Next slide, please.
Okay.
So we have a great team. My background is in algorithms. I've been in early stage startups in the Bay Area that have become unicorns and category leaders. I'm one of the original inventors of the noise cancellation algorithm that's now in the Beats headphones. I focus on sales at Zabble, and I have Kelly Nelson, who is an award-winning data scientist who handles product development. We have 5 full-time members at Zabble, and we have a great set of advisors from large corporations and professors from New York University. Next slide, please. And so the problem that we're really trying to solve is waste. In the US, commercial buildings, universities, hospitals, offices, hotels, the places we normally visit, contribute 40% of the annual landfill waste. And they end up spending $9 billion in excess every single year. And 60 to 80% of that could be recoverable from ending up in landfills, which is what the majority of the costs are. And there's a huge potential to reduce 75 million metric tons of greenhouse gas emissions. Next slide.
Okay.
And so currently, the building managers or the organizations that have waste-related goals and are trying to reduce their waste costs have a couple options. So they hire consultants who come in and do waste audits, which is manually sorting through the garbage, weighing it, using a scale, and then providing a static report on spreadsheets to the buildings. The other options are there's sensors now that buildings can install in dumpsters that are located outside the buildings, but it really doesn't provide granular information as to where the contamination or improper disposal of waste is happening. And then the third solution is point solutions like bill pay that basically that allow organizations to pay off their waste bills, pay off the waste haulers every month, but it doesn't really drill into the analytics, pull out the data as related to the tonnage or how much waste is being hauled away and how often. Next slide, please. And so currently we're seeing some big market trends. The EPA, the Environmental Protection Agency, released the National Recycling Strategy end of last year. And as part of that, they are pumping in $350 million to advance the recycling infrastructure in the next 5 years. There's a lot of huge macro trends in terms of China banning the import of recyclable materials, and hence the cost of recycling has gone up. The major companies, the Fortune 500, and they have been signing up or declaring sustainability targets such as net zero, and waste reduction is always a part of that. And then finally, technology has made a huge advance in this space. And so the global waste management software market is around $19 billion, growing at 10% every year. Next slide, please. And so our solution is Zabble Zero. It's an AI-based end-to-end platform for waste management and workflow automation. So we have a couple products, invoice analytics and mobile tagging. We have a patent issued for mobile tagging, and we have one pending on invoice analytics. What they allow you to do is provide full visibility into waste from the point of disposal inside the building to what's being hauled away. So through invoice analytics, our clients can upload their invoices into our platform. The AI digitizes it, extracts all the relevant information, and then presents it on a dashboard, and also runs an algorithm to suggest where they could save money by identifying billing inconsistencies month to month or providing opportunities to reduce their costs. And then with mobile tagging is another AI-based solution, which is a mobile app where the facility staff who want to identify where the hotspots for contamination are or the improper disposal of waste in the bins, pull out their phones, snap a photo of the bin, and the AI automatically tells you how full the bin is, suggests contaminants that shouldn't be disposed or were disposed in the bin incorrectly, and sets off this automatic notification process to connect to the right stakeholders, whether it's the custodians or the janitorial staff, the facility members, the haulers. And so everyone is on the same page with what's going on with waste. And finally, they use the sample data of what's being tossed incorrectly to go out and conduct outreach and education using our signage builder on our dashboard. And so all this is available on their web dashboard for them to slice and dice the information more granularly. Next slide, please. And so we're the first industry end-to-end digital transformation solution for waste. So we fully digitize the inventory from the inside the building, the workflows, and provide the analytics. And we're working with really proud to work with some of the largest institutions in the Bay Area. And we also work with the Recycling Partnership that uses our application for the city of Atlanta to monitor recycling contamination. Next slide, please.
So, question. These clients, you have 5 clients, you're saying 5 enterprise clients, UCSF, Stanford, the Recycling Partnership. Are these paying clients?
Yes.
And what order of pay, what is the business model here?
It's a subscription platform. So I have it in like a couple slides down. I can explain it. Our usage metric, just to quickly go over, we've been exponentially growing in terms of how our application is being used, but essentially it comes down to how much waste is being sampled and how much we are able to help divert from the landfills. And so in 2021, we were able to almost divert 100 tons of waste from ending up in landfills. That's the size of a big blue whale. Next slide. And so this is sort of our breakdown right now of our target market. So we're focusing on healthcare institutions, university hospitals, and universities. So for our two products, we charge $5,000 per year. So it's per organization, but it depends on how many buildings they have on campus. And mobile tagging is $10,000 per year. And then we have a value-added services to set up and kind of walk them through the success of the application. And so we think it's an $86 million market to start off with. And then next slide, please. And then sort of looking.
What is your revenue right now from this? You've been in business for a few years already.
Yeah, I have it in one of the other slides. I can go over it. So just expanding over, we think it's a $5.4 billion market, just kind of looking at all the commercial buildings in the US that have a part of a campus. And sort of also specifically looking at where the big problem areas are with the amount of waste produced. And so 5.4 billion is what we think. And then going to the next slide, there's another huge development that happened this year in California. There's a new law that where California is trying to reduce 75% of their organic waste from landfills in the next 5 years. And so we have been contacted by cities, including Santa Clara County, and City of Palo Alto, to be able to use our application to go out and inspect bins. And so this could be a pretty huge near-term win for us. And then next slide. So this is sort of our revenue. So we're currently at 200K in ARR. And by the end of this year, we're slated to get to about 400K in ARR. And so when I reached out, I think it was 2 years back, we were in 2020 at 80K ARR with a couple pilots and one annual subscription paying customer.
Okay.
And then next slide, please. And so looking at just sort of last year, our win rate or the active deals that I thought I would close, I had about 25 of them and I was able to close 5 clients. And this year we have about 23 active deals, and sort of looking at the same ratio, I'd be able to close about 750K in the next 12 months organically. But in order to speed this up, next slide, please, is why I'm trying to raise a seed round at 750K. And so far, we've been funded by friends and family, bootstrapped, received a grant from the city of San Francisco, received a grant from the EPA. And there's a huge $350 million of non-diluted grant coming in from the government. And we have already qualified for a $400,000 phase 2 award from the EPA because of our phase 1 qualification. And so really this is a great opportunity in this space to grow this technology. And so this is where we are. And with the 750K, we'll be able to get to 1 million ARR within 12 to 18 months with 20 customers. Currently, our customers are paying us an average of $50,000 per year for the subscription. And we'll be able to hire, get our sales going with a marketing manager, a customer success to support those transactions and improve our product pipelines. Excuse me.
And
yeah.
So what kind of trajectory do you see? It's a relatively slower growth bootstrap business that you want to accelerate with funding. So what is the trajectory for going forward? What does it need? It needs salespeople to go sell this thing? Is that all you need?
Yes. So we need sales to penetrate the university and healthcare space. So I hired the first salesperson a couple months back, and we're literally now basically our pipeline has tremendously increased since then. So we're basically banking on applying this model. And if you go back to a couple slides, all our inbound requests are from corporations, really large corporations who really want to start using our platform. So, and that's just inbound. So I think if we are able to get a couple sales folks in the different areas and customer success to support them, will be able to grow much faster than it was just founder-led sales until now, just me basically.
So can you, let's say you are able to raise financing, can you deliver $0 to $100 million in 5 to 7 years?
So right now my projections go up to 2025 to 10 million in ARR. That's what I have so far.
2025, $10 million in ARR. So 2022 is going to be about 400K, you said?
Yeah.
And then
400K
what is
organically. 400K organically. 2023, we would be doing 1.3 million. 2024, 3.8, and 2025, 10.
So that pace of growth is not going to excite investors. That's the issue.
Okay.
Investors, if you start getting into the professional investors, friends, families, a different thing. And friends, family do not belong in the same bucket as angels. Angels belong in the same bucket as VCs because angels are feeders into the venture capital world. Friends, family is a completely different category. You can do a slower growth business with friends, family money, no problem. But the minute you get into the angels and VCs and that category, they're looking to go from 0 to 100 billion in 5 to 7 years. So, so that's going to be the first issue that we're going to have to deal with. If you decide to work with 1 million by 1 million, that is one of the first issues that we're going to have to address before I send you out for fundraising.
No, I agree with you 100%. I think it's basically my sort of bottleneck to be able to think larger than the 3 years that I am looking at, where I'm really confident about what we can do, and then being able to see what's the larger opportunity here.
Yeah. Well, I mean, if I can help you with that, if you decide to work with 1 million by 1 million, that's something we can work on and get you. Inevitably, in most of the fundraisings that we do, we have to do some work before taking an investor. I mean, I'm taking an entrepreneur out to meet investors because there's prep work involved. Very rarely do we have something that is completely camera ready, that is ready to go out to investors.
I agree. Yeah, 100%. So just this week, I was able to pitch at the Stanford Angels and the Band of Angels, and I got about 8 people that are interested and wanting to move forward. So I'm setting up. So the meetings are all set up for this week and the next week, and really trying to get some momentum. We also got a social impact venture group in Silicon Valley to back us in that $125,000. And so there's a little bit of momentum right now. But you're absolutely right. I think I still need to figure out that big picture and how to show.
Well, and be careful how you pitch to them. You're getting interest, that's great. But if you be aware of the fact that, that interest doesn't get fizzled just because you're showing a slower trajectory of growth, because that is not what they're generally looking for. The impact investors are more patient investors. But generally, angels tend to be rushed and are on a different trajectory. So I would kind of repurpose your pitch before you actually pitch them on how exactly is the growth going to happen and at that pace.
Got it. Yes. Yeah.
Okay.
Thank you.
All right. We can come back to you in a moment. I have one more pitch to handle. This is Gaurav Mittal. All of you, we will, I think, have time for more Q&A in a bit. But let's go to Gaurav Mittal in Chandigarh, India.
Hi, can you hear me?
Yes, we can hear you, Gaurav.
Hi, Sramana.
Speak up a little bit.
Hi, Sramana. How are you?
I'm okay.
Great.
Tell us, what are you working on? Enthu.ai, that's a nice name.
Yeah, it's a nice name. I know we got a lot of compliment for that. So essentially, we can move to next slides later. But the genesis of the idea is that in all the communications we do, the voice communication is paramount, even in the world of chats and emails, etc. Right? And businesses usually don't get a lot of insights from these voices because it's analog in nature, and to get the insights you have to digitize it. So the genesis of the idea started there, that can we use voice to enable businesses to get insights, right? So can we move to the next slide? So this is founded by me and Tushar. We know each other from past 23 years. I have been a serial entrepreneur, done a venture in a tech before. I couldn't scale it up, so moved to jobs. So at this point of time, we are around 1.5 years old company, building this SaaS product from India for the world. The primary focus market at this point of time is the US market, right? Can we move to the next slide? So essentially, the problem I have defined that essentially voice has a lot of data, and we thought that we'll use the voice data to enable businesses. But the point was, what is the use case? What particular use case should we solve, right? Because the statement is very generic. You can use voice, but for what, right? So we thought that there are a lot of contact centers where there is a voice function, and then the voice is recorded, and then there is a process called QA process which is being set, right? And the QA process is to look at the quality of the calls, train the agents, and create a better CSAT score, right? So we got deeper into that, and if we move to the next slide, we found out some pain points. So we found out that the evaluation of all the calls which is happening is less than 0.5%, right? So a very small sample is evaluated. The processes are manual and audit driven, is all non-scalable, right? And once the assessment is driven, the coaching and the training which is done for a particular agent is not well established, and usually they go to one size fit all kind of coaching models, right? So, and we also found out that for contact centers in finance, in healthcare, there is huge compliance and regulatory risks which they are carrying, right? And that's where there is an opportunity. And definitely there are operational inefficiencies which are there, right? So that's what the pain points we found. We may skip on this slide. I think this is not relevant at this point of time. So we established the solution. We created an AI model which do your 100% QA, give you insights on how the agents are performing, and then bring in the opportunities for agents to train, right? So that we are automating the entire QA department at this point of time.
So what do you have here? This price for speech AI, what is you're taking every single call and running it through your AI? That's what you're charging for. What is the unit of that price for speech AI?
So we charge for on per agent per month basis, right? Because we are saying we evaluating an agent, we are evaluating all the calls of that agent, and we are helping you improve that agent's efficiency.
Okay, got it.
Yeah. So can we move to next slide? Yeah, so this is the what the model looks like. So we take a call recording. We are in process of building a chat and email. We then transcribe into a text, and then basis the business requirement, we build the analytics over it, right? So we train the models basis the business requirements. Some of the businesses want to increase their CSAT. Some of the businesses want to increase their sales numbers, right? So we have two models for that. Yeah. So that's and we are impacting these matrices. Firstly, we say we cover 100% of the calls. We reduce the average handle time, which is one of the matrices which industries is looking at, by 40%. We increase the evaluation by 3x, 5x. In the revenue side, we have helped a couple of clients increase their revenue by 13%. The SQLs have increased by 50%, and wrongly qualified leads brought down by 84%, just by the way of coaching and training the agents. Yeah. So let's.
And how many? This is a B2B business, right?
This is a B2B business.
How many customers do you have?
So at this point of time, we have 11 customers.
And they're all Indian customers?
No. We are selling. They are mostly US customers, right? They are SMB customers. Yeah.
All right.
They are SMB customers.
So talk to me about the competitive landscape. This idea has been around. There are other people who are doing it. So what's happening?
Yeah. So that's where we are stuck at this point of time, right? So if you look at the revenue intelligence space, you would find big names like Gong and Chorus, right? So they are essentially serving large scale clients and large scale B2B clients. So we are not serving in that market. They are usually solving a sales use case. What we are solving is more or less a contact center use case where the calling is happening en masse, and we are targeting a mid-market or an SMB at this point of time, right? But in even that, there are a couple of players like Observe, Unifor. There is this new player called Cresta, which has just come up and has become a unicorn, right? and
Mm-hmm.
Unifor has also become a unicorn a couple of months back, right? So when we started, we didn't know that the space is per se crowded, but now it seems to be a crowded space, right?
It's very crowded.
That's where we are stuck, right? So right now we are sitting at an ARR of around 50K, right? The problem is the speed is pretty slow, right?
50K ARR or MRR?
Yeah, ARR.
ARR, okay.
Yeah. The problem is the speed of our GTM and acquiring customers is pretty slow, right? Uh, the other problem is we thought that it is a play where we can build in India, start sell in the US from sitting from India. That is perhaps not happening. What we can see that all our competitors have their on ground sales in the US, right? So all of them seems to be well funded, right? Whereas we have raised a friends and family round till now, right? So that's
Yeah.
the overall scenario where we are, and that's where we are stuck, right? Now and that's where we need your guidance, right? How to go and do a GTM, maybe
Yeah, we have to
should
find a go-to-market strategy that addresses that competitive landscape and finds you the gap. So,
right,
yeah,
right.
that's exactly right. That's
And
exactly
and
where we need to work.
And the other question is overall, the revenue intelligence market seems to be a very fast moving market. Whereas if I look at the contact center market overall, it seems to be a slow moving market. So the other question is after 1.5 years, is it right time to pivot? Is it right time to look at uh,
No, pivot, right? The technology is similar. I think it's I don't know. I haven't looked at the details yet, so I will look at the details if you decide to join 1M by 1M. I think actually, there is a tremendous problem with churn
Mhm.
for businesses. They have customers, but the customers churn, and there's a customer lifetime value problem. So, if your technology can impact churn, we can come up with a positioning around all that. So, I mean, there are ways of playing this, I think, but I will need to work with you on the competitive landscape and better understand the competition before we can go there. So that's. I mean, if you join 1M by 1M, that's going to be the first thing we're going to work on.
Okay. The other thing is that since most of the competitors are really in a funding game, right? So this requires funding, right? So we have been in the fundraise sprint, but then because of the slow growth, perhaps that's not happening, or perhaps we have not put in the right effort. So whatever the reason is, but as
It's
per
going to require work. You're not ready for funding for those reasons. If you're showing slow 50K ARR, it's not going to get you funding in a market that is that crowded unless you're able to figure out how to crack that nut and show that, yeah, you have a trajectory, you have a way of getting to fast growth. Unless you are able to show that the funding is not going to happen. But that's what we're going to be working on.
Okay. All right.
Okay?
I think yeah. That makes sense. So that's about our business. So yeah, I think your suggestions make sense.
Yeah. Okay. All right. Good. So, all of these are interesting businesses. I would say very interesting businesses. So, this is the kind of businesses we like to work with. It's I love, coaching entrepreneurs who are working on businesses that have at least some level of, validation. So, let me point you to all the resources in 1M by 1M, and you're very welcome to join the program. Everything is on 1M by 1M.com. So we are completely virtual, and you can access this from anywhere in the world. That is the beauty of 1M by 1M. Your learning could start for free on the blog. A lot of people follow the blog and learn. Yesterday, I interviewed somebody who has now become a successful entrepreneur, but who started following my blog in 2010. So 12 years later, he has built a company, and he came to share his case study with me. And it was such a pleasure for me to see this. I love every time this thing happens. It's been happening a lot because, I've been writing this blog since 2005. We started the Entrepreneur Journey series in 2006. So now many, many, many entrepreneurs out there have kind of grown up on this this body of work, and they've learned a lot from that, and they're avid followers of the blog still. So you can actually learn from the blog as well. Of course, you can also learn from the book series, the Entrepreneur Journeys book series, also case study-based books available on Amazon. The free roundtables happen every week. We have had a tremendous amount of interaction through these with entrepreneurs around the world. If you want to work with me and get ongoing feedback, access to funding, and so forth through 1M, you're going to need to join the premium program, where we offer you extensive methodology guidance, weekly, strategy consulting, coaching, mentoring, whatever you call it, but it's this kind of session where we actually work on your project. And the curriculum is very helpful in that, is that in the combination of these roundtable consulting and the curriculum is how we plug knowledge gaps and advance businesses. We do have a terrific Rolodex in, not in every segment, of course, right? So, but we can get you into a lot of different parts of the ecosystem. Of course, we have a tremendous Rolodex in the investing world, and we'll be happy to introduce you to investors. But before we send you to investors, there's work that needs to happen to make sure that you don't trip out of the gate. So one of the things I said today is that I think it was to Nikhil, I said, your slides are showing a slower growth rate than what investors are looking for, professional investors are looking for. Before you go pitch to those investors, you're going to need to address that. But this addressing a point like that is not a cosmetic thing, right? You have to really deeply understand how do you accelerate your go-to-market strategy and be able to convince the investors. And if I were advising you, Nikhil, I would suggest that you schedule your investor meetings a little bit further out. Come into 1M, work with me so that I can guide you on how to address those issues, so that when you go in front of the investors that you have already got a little bit of traction from, the chances of that closing is higher. That's the whole thing. Going to investors prematurely or going to investors with problems in your pitch is what results in rejects. So please be careful about that. And it sounds like Gaurav, you're facing a similar issue, is that you're getting pushback from investors, but there's work to be done here on strategy and to tell the right story that will resonate with investors, but you don't have that story. So if you go to investors without that story, you're not going to really get traction. So that's kind of my guidance on how to use 1M. Go to the self-assessment. This is a free due diligence tool. Investors use this kind of questions. You please make sure that you're able to address these questions, answer these questions before you go to pitch. The bootstrapping course on our site, on the blog, pinned to the top of the blog, is a very good starting point to understand the philosophy of not only of 1M, but this is how the industry works today. Investors are looking for bootstrap first, raise money later scenarios. So you have to bootstrap first, get to some level of validation, some level of traction before investors want to invest in you. Another body of learning material is our Udemy courses. There are about 30 courses that you can learn from. We've released a bunch of the 1M curriculum. Definitely you can start learning there. And of course, 1M Basic gives you access to our entire curriculum at $99 a month subscription. Any methodology gap needs to be filled somehow, and a lot of that you will find opportunities to fill through the 1M program. So go to the website, dig around, look at what to expect from premium, basic, FAQs, video FAQs. The curriculum is a case study-based curriculum. Thousands of successful entrepreneurs have contributed their case studies and participated in this program to allow you to learn from them. So you get to stand on the shoulders of giants, and that's very helpful, very inspiring, and very educational. So it is very much a case study-based program, and that is the differentiating factor in one of the differentiating factors in 1M. Our investor introduction policy is laid out clearly in on the website as well. Definitely take a look. Bootstrap first, raise money later is the mantra. Do not go to investors as beggars, go as kings. And that is it. We have every week in June, we have roundtables. You're welcome to come. If you've already pitched, then for further interaction, you're going to need to join the premium program. But if you haven't pitched yet and would like to get a discussion going, please feel free to register for a free roundtable. That is it. We can go back to Q&A. We have plenty of time for Q&A. If you have questions about the program after this event, you can contact Irina Patterson, irina@1mby1m.com, and she'll answer any questions. She's been with the program all along, and she knows the ins and outs of how 1M works. So if you have any questions on that, you're very welcome to look at it. All right. Any other questions?
Yeah, so this is Gaurav. Just want to understand that the premium program also works in this roundtable format, right?
Yes, that's right. Exactly right.
And then how do you work with an individual startup?
So this is exactly like I work with you today, looked at your pitches, looked at your questions, answered your questions, and worked dialogue on your pitch. That's exactly what happens in the roundtable, in the private roundtables. But you can, in the public, you can only come once for free. In the private, you can come as many times as you want, and we have multiple roundtables every week.
Got it.
Okay. Shekhar, thank you very much for coming and for staying through the pitches, and thank you for your comments about your appreciation for the program. Thank you very much.
No, thank you, Shramana. You're doing a great job. You're absolutely inspiring. I think the entrepreneur should definitely, use your credentials, and I'm pretty sure, there'll be a very, very fruitful journey, for both the entrepreneur and the way, you're doing things. Thank you so much once again.
Thank you very much. Bye, Shekhar.
Thank you. Bye.
Anybody else? Questions, comments?
I have a question. So, so in terms of what attracts the investors, what sort of a growth sort of trajectory should they be seeing? Like, because if there isn't a lot of background, or maybe just a couple of years, how are they sort of, interpolating between those slope lines of growth?
There are, it's not uncommon that in the early years, you don't have very fast growth, right? You're building the product, you're expanding the market, you're working with customers, and you're trying to figure out what causes a sale to happen, what is the sales cycle, all of that. So yeah, investors don't mind the fact that your early growth rate is low, and you don't have a lot of resources. So I don't think it's going to be, in your case, I don't think it's going to be a huge problem. The fact that you have slower growth, until now, it's not a problem. But if you project slower growth going forward, that is going to be a problem.
I see.
So you need to credibly present that you're going to have the growth is going to accelerate. This is why the growth is going to accelerate. That investors need to understand that you have figured some things out which are causing the faster growth, or which will cause the faster growth, and these are the levers you're going to need to move to achieve that faster growth, and that you have to do credibly. That's what causes financing to happen.
Got it. And so when you present the financial forecast as well, so it basically has to go out that 5 to 7 years and show that it's on the path to hitting 100 million in ARR in 5 to 7 years.
That's correct.
Okay, got it. Makes sense. And then all the other sort of the functions in the business, the R&D, S&M has to support how you can get there.
That's exactly right. That is exactly right.
Okay, I think that's the area where I need to work on. I have these models, but who knows how accurate these models are. I come up with my own assumptions in terms of how I close, I project it out. And so that's where
but that's where I think if you if you use some of our case studies and methodology elements, you will find that there is, you don't need to reinvent every single wheel. That's why we're doing this program, so that you don't have to reinvent all the wheels. There are proven methods, there are proven methodologies, proven metrics, proven strategies that accelerate growth. And you're going to need to understand those, learn those, and implement those, or at least, figure out a game plan on how you're going to implement those when you get resources, when you get funding.
Got it. Okay. Makes sense. And then in terms of
repeatability is very highly sought after.
Yeah, got it. And then in terms of working with you, like I think Gaurav asked this question. So is it basically the subscription, and then we just participate in multiple the private roundtable sessions?
That's right. We'll just basically, all those roundtables are working sessions. So you subscribe to the program online, and then you get notified about all the roundtables coming up, and then you just come and work with me at the roundtables.
Okay, but
you do the curriculum as well. So I will say, go look at that case study, go look at that module of the curriculum, and so forth, and that's going to happen. You'll see that's going to happen, and that's going to also help you learn faster and implement some of those methodology elements into your strategy. And as you do that, you will find the keys to faster growth. It happens all the time.
Got it. Okay, yeah, because I was going to ask about the implementation, because I can soak in all the information, but I have to figure out how to implement it as well, right? And fast enough that I can see the results and then double down on it or change directions or whatever, right?
Yeah, no, I mean, but some of it, investors understand that without resources, you cannot grow so fast. But you have to show understanding of your business. And you have to show your understanding of the methodology of fast growth. That you have to convince investors to bet on you, that you have to show.
Okay. Yeah, no, makes sense. Yes.
And that's where we will help you.
I think I understand now. So thank you.
Ramana, I have another question. So, in a space which seems to be have a funded players, right? So do you think is there a way to grow in a bootstrapped way, or it has to be
There is actually a very good question, Gaurav. It's one of my favorite questions, actually. Yes, the answer is yes. There are two ways of doing this, One is you find a go-to-market strategy that allows you to grow well and grow fast in a bootstrap mode. And you find a gap in the market. These unicorns are going after certain things, and you're going after certain things. You will find the gap. We will find the gap. I'm pretty sure we'll find the gap, and we will position the company so that you can grow bootstrap. Then comes two questions, right? One is, as you start to grow fast, do you go after funding, or do you kind of play it out a little bit longer and let one of the unicorns acquire you? This is also a strategy, and this is a strategy we're following elsewhere. Or some public company to acquire you. You could also pursue a bootstrapping to exit strategy. And we have we have developed the bootstrapping to exit track quite well, and we have sold companies through 1M without raising much money, maybe a little bit of money, but then we've gone straight to exit. All this is also working. And then, in some cases, what happens in a market segment that has been flushed with capital, there are a lot of unicorns, huge, hundreds of millions of dollars of money. Sometimes these unicorns end up not executing very well. Too much money takes away discipline from a company. And when unicorns start to implode in a market, that market moves to you if you can maintain, if you can keep your head cool and keep executing, build a good product, build good disciplined execution. That's when the fundamentals focused companies start doing very well. When the unicorns start imploding in a space, the customers move to the more fundamentals focused companies.
That makes sense. I think that's helpful. So,
But unicorns are inevitable to implode. Some unicorns are going to implode. Not all. Some unicorns are going to do well, but there will be unicorns that will implode. So it depends, really. But all of those are viable paths for you. You can still be successful in a market segment that is big and highly, sought after and has a lot of unicorns. You can still play.
Makes sense.
Some markets are winner takes it all, but your market is not a winner takes it all market.
Yeah, no, great question, Gaurav. So I had a similar question. Basically, Shramana, so 3 years back, I was I was introduced to your work through a Coursera course that I was doing, and I was like, okay, I'm not going to raise any funds. I'm literally going to figure this out myself, right? That's how I started. So total, kudos to you for to help me find my inspiration. And then later on, so every time I was starting to fundraise or try to think about how, it was always like I had to think big, not just think of how can I solve this immediate problem right now for these universities in front of me, but then I had to start thinking big, and I was not comfortable with that. Every time I got this course correct, when there was this person called Gopi Rangan, you might know him. I spoke with him. He's like, this was 2 years back, and he was like, listen, go back to Shramana and look at her blogs. And I was like, I did that again. And then I postponed the need to fundraise until I figured out what it is that we wanted to solve, and why would someone pay for
and
this.
I think your reticence or reservation about thinking big will start to get addressed as you figure out the mechanics. We are always afraid. Human beings are always afraid of what we do not know.
Correct.
As we start developing knowledge and as we start plugging the knowledge gaps and the knowledge enhances, it becomes easier to think big.
Yes.
When you don't know how, say, I need to deliver 0 to 100 million in 5 to 7 years. How? We don't know the how. It's very scary. It's very daunting.
Right. And so then my question is, if the strategy is to get bought out and so let's say we hit 10 million in ARR and get bought out at between 50 and 100 million by one of those unicorns, and there's hardly a couple big companies in this space right now. But I think my problem is that pitch doesn't lead to any funding, right? Like it's basically too small of a thinking from the investor's standpoint. And so I'm basically trying to.
There's a new category of investors that are following that path.
I see.
So it is not entirely not true that there is no investor that are thinking that way. But there's your situation and Gaurav's situations are a little bit different. Gaurav's market is very crowded. Yours is not, right?
Correct.
Yours doesn't have so many big players, so many unicorns. Gaurav's market has a lot of unicorns. So some of it is you do need buyers to be able to follow a bootstrapping to exit strategy.
Right. Makes sense. But I have to be. Do I have to be very clear? Like if I'm going down this path, there is a very clear fundraising strategy, and if I go down the VC path, there's a clear fundraising.
There is. You have to control the amount of money you raise. If you want to do a bootstrapping to exit strategy, you have to remain capital efficient, because every time you bring in large chunks of funding, the bar gets higher. The bar at which you're going to be able to give returns to your investors gets much higher. The valuation gets much higher. So smaller deals happen more easily than larger deals. That's just the reality of the market.
Okay.
Most acquisitions are under 50 million acquisitions. So to make money for all the stakeholders in a sub $50 million price point, exit price point, you're going to have to keep the capital raised low. Otherwise, the investors are going to eat up everything.
Yeah, no, that makes sense.
Okay. Anybody else? Any other questions? Very good roundtable today. I really enjoyed it.
We enjoyed
You're all
it
doing
too,
interesting
Shramana.
work, and I think there are things to figure out. But in our early stage entrepreneurship, there's always things to figure out. No problem.
Yeah, but the one thing, Shramana, in early stage entrepreneurship is that you are always jittery as well on your next steps, right? So that's where perhaps our mentorship would help.
Sure. Well, join the program and come work with me, and I will steer you in that direction of clarity. One of the books that I did is on positioning. Positioning is one of the areas where Gaurav, you are going to spend a lot of time with me on.
Yeah.
I used a quote in the beginning of the book, you have that quote was, "Clarity is the highest form of human intelligence." And I really believe that. Personally, I really believe clarity is the highest form of human intelligence, and getting to clarity is a lifelong journey. But I think what we have done in 1 Million by 1 Million in creating the curriculum and the methodology is to steer you to that clarity much more rapidly, much more efficiently, vis-a-vis your business and your choices.
Makes sense. Thank you.
All right, folks, I'm going to wrap up today, and we'll see you next week. Bye.
Bye. Bye.
Thank you. Nice meeting you all.